Another stock that we're talking about is Paytm. It's seen a surge of 3x from its Feb lows after a tepid listing in November 2021. The company has seen its shares of lows and highs, but recently Paytm's Singapore arm is close to finalizing a $250 million deal to sell its stake in Japan's digital payments firm PayPay Corporation. Will this aid the stock? What's next for the company? Harsh is joining in with a deep dive. Harsh, I think what people are interested in knowing is that can Vijay Shekhar Sharma actually pull off this revival plan?
Yes, and at least if purely going by stock price action, it seems like something seems to be working. But let's look at it from an exchange perspective. Its journey on exchanges. That's the first thing I want to try and cover. Well, it was valued at 1.5 lakh crore during the IPO. The issue size was around 18,300 crore. 10,000 crore was the size of the offer for sale, and 8,300 crore was the fresh issue. So a lot of investors getting an exit at 10,000 crore, mind you. IPO price was 2150, which we've never seen till today, and therefore the listing in November of 2021 was a tepid one. Despite the stock being up 3x from Feb lows, we are still half of what the IPO price was, and the stock has never touched that price as of now. It's had its fair share of issues, but let's try and understand what Paytm actually does. It's of course a new age fintech business, manages payments for merchants, cross-sell of loans and wealth products is what the business largely stands on, and it also does monetization for companies, sells credit cards on its platform, and sells various other products and services on its platform as well. How does Paytm do its business? It first acquires individual customers, especially with a larger focus on UPI now. Wallets has had a very tough time over the last year or so, given all the regulatory action. The merchant customers via payment innovation, something like a Paytm Soundbox, you would have actually witnessed that in a lot of Kirana stores, where if you make a payment through a UPI or a Paytm wallet, you have a Soundbox which tells the vendor as to how much you have paid him. Cross-sell of high margin services of partner banks, NBFCs, insurance companies, wealth managers from acquisition of these customers. So they acquire merchants, they acquire individual customers, and then they cross-sell their products. The current revenue for half year FY25, mind you, and I'm having to take half year because there's just so much movement in terms of the numbers that we have to work with the current numbers for now. So 3160 is the current revenue, 3160 crore in first half of FY25, and within that, payments and financial services is 78% of the revenue. The balance 22% has come from cloud. The revenue has actually fallen 35% on a YOY basis because of all the regulatory action that's playing out, as well as the kind of risks that are cropping up in unsecured loans. So regulatory action is the regulatory action by the RBI and Paytm Payments Bank is largely the problem here. The payments business currently is ceding market share from 11% of market share last year, December of 23. We're currently sitting at just about 6% in September of 2024. That needs to improve and likely will. The customer acquisition has been impacted due to the regulatory measures, and also it's caused a lower loan disbursement. Now, loans have been a large part or a large revenue contributor as well as a profit contributor for Paytm, and we look at the numbers. Margins had improved dramatically due to that, but because of the embargo, the restrictions, they've had to pull back on the business with regard to loan disbursements. But you've also got regulatory action easing a little bit, which has started to aid the business just a little bit. Market share as well as action with regard to loans is still awaited, and how that plays out on the business will still be viewed at over the next maybe 3 to 4 quarters. But in terms of the new business, they're going to lend from their own balance sheet, which should help the numbers, especially the top line. Credit costs will therefore come into focus and will be a key risk as a result of that. Paytm selling non-core businesses to generate cash. They've sold their entertainment business to Zomato. They've also sold the PayPay business straight back to SoftBank. And as a result, what they're going to do is they've raised roughly 4,500 crore. Their cash balances have risen from 8,000 crore to 12,500 crore. That's large, given that the market capital of the company itself is around 62,500 crore at close on Friday. And therefore, you'll likely see some bit of positivity given that there's a renewed focus on the current and the profitable business, domestic business of the company. This is how the cash balances are evolving. They've divested from PayPay as well, 2,400 crore coming through as a result of that. Now, let's look at some numbers. FY27 expected revenue, as per Bernstein's expectations, is 10,000 crore. Should double up by FY30 to 20,000 crore in terms of revenue. EPS, the base case EPS that Bernstein has given is 72.3 rupees per share. This is FY30 base case and bull case. So the bull case just looking really strong if it were to play out, of course. But these are basically their expectations. Now, I'm going to try and talk about catalysts. In terms of the manner in which the adjusted EBITDA has moved, you can see the positivity all the way up to maybe Q3 of FY24, where adjusted EBITDA was growing consistently and fast. But there's been a sharp knock post that, given the regulatory action. And there's been a bit of a recovery as well in Q2. Will Q1 be the bottom, and from Q2 will we only see a recovery? We'll have to wait and watch. But that will be the key monitorable that the street will look out for. Can adjusted EBITDA continue to improve? Also, they've resubmitted their application with regard to payment aggregator license. Is going to be the key, because sentimentally it's going to be a positive if that were to come through. And business-wise as well, it'll be a positive. You'll have merchants having more access, newer merchants coming on board and having more access to a plethora of payment options that merchants can avail. And that will, of course, aid the business overall for Paytm. We'll have to, of course, it's still awaited, and therefore you'll have to kind of mark that. The third possible trigger or catalyst on the stock is it has a 6% market share currently, down from 11 last year. Can it start to recover market share, which it has ceded? Also, a margin improvement could further aid profitability. Currently, margins are low because there are regulatory pushbacks with regard to hiking payment margins. But if that were to change, you could very well start to see margins improve and profitability could be driven. There's also disbursal volumes which could also go up, and if that were to happen, you would start to see profitability start to kick in. It would aid both top line as well as profits. And just in terms of the other key catalysts, I'm going to try and mark out. You have OPEX. OPEX has been a key overhang on the stock and the profitability. If OPEX were to start to come off, that could be another key driver. Now, in terms of risks, and there are plenty of them, but I'll cover the top 5. Further regulatory action could well dent the business. A slowdown in the loan business could dent profitability. Headwinds in the payment segment, as well as slowdown in and asset quality issues, given that they're going to lend from their own balance sheet, could well impact the company. A higher credit cost from lending from their own balance sheet could be a problem which could get posed.
It was a very, very extensive and deep dive into Paytm. Thanks for that, Harsh.